Good evening. I'm Doc Severson for the Theo Night Report for Thursday, December 14th. Well, you got to know that we have a really mild market when on the Dow today we have a bearish engulfing pattern here. So today's candle printed a higher high and a lower low and encompassed yesterday's candle, the bearish engulfing pattern, and a key reversal bar as well too, but it's hard to get excited about this when it's only 76 points. So all it takes these days to get any kind of a red candle, especially as we get near the end of the year, is the slightest hint of any information which is not already priced into the market. So I think a lot of assumptions were recently, and a lot of this rally is that we're going to get a tax bill by the end of the year, which is going to be favorable to the economy. Today, a little fly in the ointment, a little wrench in the works today is a couple of Republican senators said that they were going to think about the bill or they may not pass it in the current form. So we got some uncertainty, therefore a red candle. Now the Russell chart, on the other hand, is a completely different matter. So the Russell chart dropped by more than 1%, and technically this is what's got me intrigued because this actually has now printed a full change in polarity to the downside. We now have a lower high and a lower low on the Russell chart, on the daily chart. Okay, so is that any reason to celebrate? Well, not necessarily. We're just seeing asset rotation once again. Apparently, we're seeing asset managers rotate out of the riskier assets into the end of the year and are going safe harbor by rotating back into technology, as we'll see in just a second here. So again, this watch out for this. This is kind of the demarcation here. This pink line that I have here is the 50-day simple moving average. And so if you recall the big fake news spike that we had, the bear market of 2017, which occurred during a 1 hour span here in early December, did touch that 50-day moving average, and we got that today as well too there. So watch how the price reacts around there. I don't normally care about how price reacts around 50-day moving averages, but this is the market trying to tell us something, is that right now it is finding some support at those simple moving averages. This is the one chart which is anywhere close to the 50 right now. Now here's the Nasdaq futures, and so you can see today was just a very mild day in the Nasdaq. In fact, it's just flagging out at the top of a move. Fair amount of energy here, so we could see one final pop up to the upside into the end of the year. And my just looking at these charts, everything else is in full exhaustion except for the Nasdaq. So if there is any shot at one final poke to the upside, it's more than likely going to be the big cap tech stocks. Now, if we just look at our index watch here on the Dow Jones, it looks like a bloodbath. It's 4-to-1 negative, 4-to-1 negative, right? So it looks like just a horrible day, and, you know, again, 76 points to the downside. But part of that is because Boeing still staying strong and is one of the highest priced elements of the Dow. So therefore, price-weighted index, it doesn't move a whole lot. Now, if we compare that versus the Nasdaq, so let's go down to the Nasdaq and look at this one here. Fairly flat across the board. But what we'll notice is that even advancers are less than decliners here. Look at the advancing volume and the money going into advancers, which is clearly outgaining the decliners. So this is why the Nasdaq to me is still the strongest of the bunch. Something else that was really mild today was the VIX futures. Look at this. I mean, we just have no, if there was any fear in this market, you wouldn't know it just by looking at the VIX futures. In fact, even with the market going slightly lower today, we had volatility selling as well. So this is a case where nobody was panic selling. It was just more of a case where people were walking from the bid. Now I'm going to categorize this under much ado about nothing this week. I think a lot of people, myself included, were really looking forward to the Bitcoin futures being released Sunday night by the SIBO. And it's been a big nothing. I mean, this is a 100 tick chart here. So 100 ticks. So each candle is 100 transactions. And so you can just see that there has just been, and this is since Sunday evening, and here we are You know, 4 days later, this has just been next to no volume whatsoever. So this has not been driving the Bitcoin spot market, unlike what I thought was going to happen. I thought the Chicago was going to just jump on this thing and go short, but there's been a lot of limitations to this, first of all. Apart from the site crashing on Sunday night and the fact that some brokers, well, thinkorswim, to my knowledge, still does not allow live trading in this account. Interactive brokers prevented their customers from shorting the contract to open. So it's been a big disappointment in my eyes. Now, the CME, Chicago Merc, is going to come out with their own contract, but it's really much more for institutional investors because it's a much higher notional value, right? And the per tick movement is going to be a lot bigger, much, much bigger for that contract. So there might be more volume coming in eventually, but it's not going to be from retail traders. It's only going to be from institutional investors. We'll see whether it makes any difference whatsoever. I'll certainly be watching on Sunday night when they light up that contract, which is going to be at least chartable through thinkorswim at /BTC. Okay, guys, that is it for tonight's report. Thanks for listening, and we'll see you this weekend. Take care.